look out my window.
Hello traders, Gary Wagner here. It is approximately 9:30 a.m. in Honolulu, Hawaii, Wednesday the 3rd day of August, and this is the Daily Report for Gold. In yet another phenomenal round last night and this morning, we witnessed a new record high in gold. In terms of the COMEX contract, that traded at an all-time high of 1675.90. Now, that's basis the December futures contract. That is what you should be trading if you're trading over in the COMEX right now. Now, the interesting thing is this. Although the U.S. debt rating was not downgraded by Moody's or any other Western firm, we got a warning by Moody's, and the U.S. has been put on what's called a negative watch list, meaning that they're going to have to show improvements without getting downgraded. The interesting story, though, is last night there is a Chinese credit rating, and they did, in fact, downgrade the U.S. credit rating, and that was based, and I'm quoting, on the fact that there is difficulty paying debts back. Very, very interesting news. Currently trading, as we look at the gold market here, at 1662. It's well off the highs. And so I want to start our day today by looking at our 3-minute chart. We can get an idea of just the kind of activity that we've seen. Of course, these are the highs that we're looking at in terms of the cash market, right around 1671, 1672. As a matter of fact, when we look at it on a 3-minute chart, you can see a series really of tops in the market. And it looks like this right here is going to be our all-record high around a little bit above 1672. Of course, unable to hold that. Market comes down, a little round of profit taking. Bottom is at 1656, moves back up to 67, back down to 62, and that is currently where we are at. Now, how does that fit into the big picture? Well, as you know, the targets that I've had are pretty much targets that have now been achieved. And so I want to be very, very cautious and very, very careful in that area. In terms, this is our daily chart. Let's take a real close look at it, traders. We've got this long day up. This is that tremendous day yesterday. Currently, we have a up day, but it is forming a small-bodied candle. Small-bodied candle, of course, gapping above is a star in the evening position. That's what we're seeing. We are also very, very close to our original target. Our original target on the upside was about 1680. If you take a look, even if this was the absolute top in the market, my belief is that gold was able to go to this point. So whenever we're looking at particular price points and targets, especially Fibonacci extension and retracement areas, realize, traders, it is a very meticulous science, but at the same time, the market is going to do what the market does. In other words, it could easily go and be close within here, and my belief is it still went to that target area. So I need to advise some caution here. Do I believe the fundamentals have changed in the market? If anything, the issue is they haven't changed. In other words, yes, the Congress passed a bill which will allow us to raise the debt ceiling. In other words, the Congress, the House, and the President passed a bill that does nothing more than allow us to print more money. How can that be anything but bullish on the precious metals? Secondly, in terms of actual debt reduction, well, they've come up with a way to stall that until Thanksgiving. Of course, they're on a month holiday, surprise, and they've got till Thanksgiving to actually put recommendations forth in terms of a bill. The bill will then have what's called an up and down vote. In other words, you can't change it. You either take it all as it is or you vote against it as it is. Interesting. European Union, the debt crisis is still there. The economy is still sluggish. Demand is growing in China. Demand is growing in India. All of these things have really boded extremely bullish for the precious metals complex, especially gold. However, my sentiment is that when you have the market come up this high, this fast. And think of it, traders. We have moved from the beginning of July, call it 1470, call it 1670, a $200 move. And we've had this move in literally under 2 months, roughly a month. A month in time, we've seen a $200 move in silver, in gold, excuse me. That's a tremendous move. What comes up really, really fast can have a tendency to come down just as fast. So we want to be very, very careful and very, very cognizant. Again, very conservative traders where it is more important to hold equity than to look at potential gains. In other words, your risk reward is conservation as opposed to gaining equity because there's sizable profits in this position. You might want to consider a stop. If you do, you want that stop below the 1641. Of course, we've moved our stop up to 1602. My sentiment is at some point we'll probably see a dip. If this is 1 and this is 2, I believe that we are now in wave 3 of our minor count. We'll have some sort of correction 4, and our final hurrah, which will be, of course, the 5th wave of this 5th wave intermediate. Of course, this is our weekly chart. It is in Henkin format. Just to show you, we are still long green with no lack of tail. So we are not showing any signs on a weekly basis that the market is beginning to falter. The next thing that we'd want to do, of course, is convert that to a daily chart. And on a daily chart, we get a very, very similar activity. We've got, if anything, because of the way the Henkin candles is drawn, it shows that this trend is still fully intact. Now, traders realize that a Henkin chart in its nature is a lagging indicator. It's a lagging indicator because it's average based. If we remove the Henkin, of course, we already took a look at what we saw. But again, once we do that, you see how it changes it so much. You get that star-like candle. So that is certainly something that we want to pay some attention to. And then lastly, when we convert it to a weekly, this is a standard bar chart, not a Henkin, you can see we are still in a very, very strong channel and a very, very strong trend. And for the last chart of the day, this is our 360-minute chart. Are we still on track for this 1710? As you know, 1680 was my one target point. So one possible scenario, and I underline the word exactly as I said, possible, because the market's going to do whatever it wants, but a possible scenario would be it comes up and it tops somewhere, let's say, to this area. At this point, it retraces, call it 38%, and then makes its final move up. That, of course, is a possibility. Now, let's take that one step further. Let's assume, and by no means do I believe this to be the case, but let's take the assumption that what we are witnessing is that dip. In other words, that this minor count is going to have yet the sub count underneath it. You would look for the market to go as low as possibly 1638 on that correction. So now we can draw this line in a little bit differently. In other words, let's assume that we have our wave 1, wave 2, this is wave 3. Wave 4 takes us to 38%. As I said, 1636. And then our final leg up to hit our target of 1700 plus on this final wave before going into a 4 corrective phase or the ABC on this correction off of 5. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.